Welcome to the podcast, where we dive deep into some really interesting investment products. Today, we're chatting about the Grayscale Ethereum Trust.
I'm excited. It sounds like a neat product. So, it's a way to invest in Ethereum without having to actually buy or manage Ether, right?
Exactly. Think of it as a bridge. Instead of you buying the digital currency outright, you can invest in shares of ETH, which is designed to track the market value of the underlying Ether that Grayscale holds.
So, it's kind of like investing in a mutual fund or an ETF, but geared toward crypto.
Yep, right, exactly. It's like an ETF structured product, making it more accessible for traditional investors, those who are comfortable with buying stocks through a brokerage account.
So, you go to your brokerage, search for Ethy, and then it's as simple as buying any other stock?
Uh huh. And what's cool is that it removes the need to manage digital wallets or deal with crypto exchanges directly.
Yeah,
It really simplifies investing in Ethereum.
that makes sense. It's kind of like investing in a real estate investment trust instead of owning an actual property, isn't it?
Yes, that's a perfect analogy. Imagine if you wanted to invest in real estate but didn't want to deal with the headaches of maintenance or direct property ownership. Instead, you invest in a trust that manages everything for you.
And in this case, Grayscale is doing all the heavy lifting with the Ether. But does that mean investors lose control over the assets?
Yeah, that's one of the trade offs. With Ethy, Grayscale manages and securely stores the underlying Ether, which is great for ease of use and security. But it also means you don't have direct control like you would if you actually held Ether in your own wallet.
I see. So there's a convenience versus control aspect here.
Absolutely. And another thing to consider is the different market dynamics. The share price of Ethy might not always align perfectly with the price of Ether.
Right.
This is because it's traded on stock exchanges and subject to supply-demand fluctuations, premiums, or discounts.
That's interesting. So even though Ethy is designed to reflect Ether's value, sometimes you might pay a bit more or less than the underlying asset's actual market price.
Yes, exactly. It's like how sometimes the shares of a closed-end fund might trade at a discount or premium compared to its net asset value.
Speaking of which, wasn't Ethy originally a closed-end fund and now it's a spot ETF?
Yep, that's right. It started as a closed-end fund and has now been converted into a spot ETF listed on NYSE Arca, making it even more accessible.
So this conversion really brings it closer to its underlying value, right?
Exactly. But even as a spot ETF, there's still a possibility of divergences due to market supply and demand.
Makes sense. There are always a few mechanics at play in these regulated investment products.
And now, when you look at the timeline, Ethy launched in 2017 as a private placement, started OTC trading around mid 2019, and just recently, in 2024, got listed on the NYSE Arca as a spot ETF.
That's a pretty cool evolution, from restricted placements to a fully accessible ETF via a traditional brokerage.
Yes, it really opened up the Ethereum investment game for a wider audience, especially for those who are more comfortable with the traditional trading environment.
Now, I'm curious about the benefits. Aside from convenience, what other advantages does investing in Ethy offer?
Well, a big plus is reduced complexity. You don't have to worry about setting up crypto wallets or navigating exchanges, which can be a technical hassle, especially for newcomers. Also, there's a level of enhanced regulatory oversight compared to buying Ether directly.
That regulatory clarity does sound reassuring for many traditional investors.
Exactly. It adds a layer of security and transparency. And think about it. You're investing via a standard brokerage account, which is something many folks are already familiar with.
True. But I imagine there are some downsides too, right? For example, management fees and the lack of direct control you mentioned earlier.
Right. Management fees definitely come into play with ETH, and they can eat into your overall returns. Plus, you may face price premiums or discounts when compared to Ether's market price.
And there's also the inherent risk of market volatility. Even though it's a regulated product, the underlying Ether can be super volatile.
Exactly. The volatility is a major factor. Even if you're investing in a more traditional structure, Bitcoin's cousin here, Ether, still carries that wild, unpredictable swing.
I have to ask though, some might say that by investing in Ethy, you're kind of ignoring the spirit of decentralized control. Is that a fair criticism?
That's a very good point. Some crypto enthusiasts feel that using a product like Ether takes away from the inherent decentralization possibilities of Ethereum. They argue that by trusting
Yeah,
a
I
single
see.
entity to manage the funds, you're introducing counterparty risk and losing out on the hands-on control that blockchain technology was all about.
Right. And that control is a huge part of what many loved about crypto in the first place.
Absolutely. It's a trade-off. For those who value simplicity and security provided by regulatory frameworks, Ethy works well, but for true crypto believers, direct ownership remains key.
Now, there are also several alternatives out there, like BlackRock's iShares Ethereum Trust and Fidelity's Ethereum Fund. How does Ethy stack up against these other Ethereum ETFs?
Good question. Each of these products has its own flavor. ETH is marketed by Grayscale, which is a well-known name in crypto trust management. However, some investors find its pricing structure a bit less appealing, especially after conversion. Other ETFs, like BlackRock's option, may offer lower fees and stronger branding associated with traditional indexes.
So it's really about weighing your priorities. Do you want trusted management, or do you aim for lower fees and maybe a bit more flexibility?
Exactly. It's a balancing act. If ease of access and a familiar buying process are paramount, Ethy might be your go-to despite its fees. But if you're fee sensitive and perhaps looking at an investment with a different cost structure, then those other ETFs might catch your eye.
And ultimately, it all comes down to individual risk tolerance and investment strategy. Media hype aside, you have to really consider what fits with your long-term investment goals.
Absolutely. Whether you're a seasoned crypto investor or a traditional investor dipping your toes into crypto markets,
True.
it's imperative to understand all these nuances. Doing your homework is critical.
Speaking of homework, I guess for many, this means understanding that while Ethy offers simplicity, there's no escaping market volatility and associated risks, right?
Yes, for sure. It's a way to sidestep technical hurdles, but market dynamics like government policies, fee structures, and crypto's inherent uncertainty remain in play.
So essentially, if you're considering ETHA, you must balance convenience, who manages the asset, potential premiums or discounts, and those volatile swings in the market.
Exactly, that's the crux of it. It boils down to personal investment style. Do you want a streamlined, regulated access to Ether, or are you ready to dive into the full world of decentralization and crypto wallets?
This has been a compelling discussion. I appreciate the clarity on both the benefits and the potential pitfalls of Grayscale's Ethereum Trust.
Likewise, it's always eye-opening to unpack how traditional financial structures and modern crypto assets can merge, even with the inherent compromises.
All right, thanks for walking me through this. And for those listening, it's been a great exploration of Ethy and its place in the evolving crypto investment landscape.
Thank you for tuning in, everyone. Keep asking the tough questions and happy investing.